Many congratulations, Remi. When I found out that you'd won second year in a row for the European Fund Sector of the Year, I was really pleased. We get our data through and the judges' votes, and good for Remi. It was great to see you in Paris last year. This year we're in your London offices. How's it feel to have picked up this award once again?
I'm delighted, first of all, and I'm a bit surprised, but I can't really say much more than I'm delighted. And I would like to thank anyone that has voted for first of all me, but it's not just me. They know it's a brand, BNP, and there's a whole team. There's 40 people behind me that support me in everyday's work.
I mean, it's a big team and it's a huge organization. You're managing a fair amount of money as well. How's that been going this year? How much is it, and how does it all work?
So roughly, to give you the big figures, we're managing or advising about 35 billion of euros for mostly the AXA entities. We have some places where we also manage for external clients, like in Belgium or in Indonesia. But that's the business, and as I said, we have teams based out of London, Dublin, Paris, Brussels, Hong Kong, and Jakarta. And therefore, those teams are located everywhere. And all of those teams are investment centers.
So you manage those teams?
Yes.
And fair bit of travel then, I'd imagine, for your job.
Yes. Well, today I'm in London. Next week I'll be in Hong Kong to see the teams. A bit of traveling.
How do you manage all the time zones as well? Because, I look after an international title and I have clients in Asia and I have clients in the US, and then South Africa and the Middle East. How do you manage all those time zones?
Well, no, I don't have the US. Therefore, it's much easier to manage Europe and Asia. So in Asia, in general, when I wake up, I already have about 10 emails from here. My colleagues and friends from Asia there. So that having two time zones, it's manageable.
Tell me how the fund segments have performed and how some could have been better, some could have been worse. How's the performance been this year?
So again, well, first of all, on the fund segment, there's always this challenge between active and passive. Nothing really new there. To look on the fund segment, the spaces where it has worked is, in general, the fixed income side has worked quite well for us this year. Apart maybe for a high yield, but I think that's because we didn't get the appropriate strategies there. On the equity, what we tend to see is that over the last 3 years, it still is a big challenge for global equities and U.S. equities. Even if we've done better this year in the U.S. space, the U.S. equity still remains a place and an asset class that is very challenged. European and Eurozone have done quite well there. Japanese yen too. But global equities, which have about 36% of U.S. equity, has them. But it still is a challenge. So we are shifting there. And why are we shifting? It's before we had just purely fundamental, strong, conviction asset managers there. What we started to actually change in our portfolios and the funds that we've been selecting is also looking at more quantitative strategies that try to have a very broad investment across a large number of equities. In general, equity fund managers select 50 stocks there. They can select 200, 300 equity, but with biases and style differences. That allows us actually to serve much more into very complicated financial environments that we've seen over the last 2-3 years there.
I like the answer. Did you say to surf?
To surf, yeah.
I like surfing, yeah.
Because if the volatility actually scares everyone, so you need to smooth out your ride.
Yeah,
especially in terms of excess return. So if you're able to smooth out your excess return to better allocate your capital,
now
that's important.
Thank you. Tell me about philosophy. Your investment philosophy. How does this fit with your plans for 2026?
So we're a multi-manager. Our objective is to beat both the benchmark and our peer groups. And therefore, our philosophy is just to take advantage of all of the opportunities and all of the cycles that we can have, and all of the opportunities that we have in the market today. Um, and in terms of philosophy, it's really basic. We have a top-down approach and a bottom-up approach, and we try to mix both of them. What I mean by top-down is that we have a macro view, and we look at all of the elements around macroeconomics. But what we also try to do is ask the teams to say, on a more micro side, what are you seeing? What's popping up? Is value doing better in Asia than in Japan than it's doing in Europe? Should we be in value? Because you can't be value all across the board. It hasn't been the case. So we're trying to mix both those combinations of macro and micro views there, try to get the best out of what we could do. So we're also opportunistic. The other element is that we focus a lot, which has never been very sexy in portfolio construction. How do we properly allocate our capital and the risk that we have in the portfolios? And we've actually been focusing a lot on this in 2025, and we will be emphasizing even more on 2026. By measuring how much risk you're taking and how properly you're allocating it, you can measure it, and you can adjust to those changes in the market.
What would be the key challenges and opportunities for 2026 for the industry and also for the investment world?
Well, one of the ways I'm seeing the industry going is, yes, the industry does push the products, but at the end of the day, what your mom, your father wants, it's not a product. What they want is a solution. We still are in this industry, which we're still not driven towards solutions. We're still very much in the product push industry. So I really believe that the solutions is made out of products. And therefore, when you come to a client, it's a whole holistic product suite from money markets to illiquid assets, private equity, infrastructure. And then in the middle, you can have ETFs, you can have active managements there. It's proposing that whole suite of products to have a solution for anybody that is looking for their retirement there. I still think that the industry is not dead. If you to take other industries, for example, the photocopy industry. Remember 20 years ago, they were selling you photocopy. Today, they're selling you a service. They're putting you the photocopy, putting you the paper, the photocopy breaks down, do you have another photocopy? They've shifted their mindset. We need to shift our mindset. I truly believe that that's where we need to go there. And in terms of markets, well, it's always going to be a challenge. First of all, we have the geopolitics that's taking a big part of what's happening in the markets there. It's bringing in a lot of volatility. One challenge for 2026 is the independence of the central banks. Talking about the Federal Reserve or even the Bank of Japan. There's a new prime minister. We're going to see how that rolls out. How these central banks are going to adjust their monetary policies, and if there's not going to be any screw-ups, just to put it very bluntly there. And then there's the AI bubble. Everybody's talking about it. So in general, when everybody talks about it, doesn't really blow up, So we'll see around the AI bubble. What's still interesting is that companies in the world are still being able to make profits. What really interesting is actually a broadening of the market, because it's still very narrow-led market in terms of the equity space. And in the bond or the credit market, well, there still is some very appealing yields in the market there. One of the concerns that we might have is that in the private debt segment, there's been so much cash coming in that you need to redeploy that cash. And therefore, you might be less tedious in selecting your collateral with the appropriate covenants. And that could spill over to the liquid space, notably the high yield, the loan markets, the high yielding, the investment grade market there. So there are going to be always opportunities. We'll have to find them. And there are always challenges, but I mean, we've been in the industry as long as I've been there, and there's always every year new challenges there, and we just have to cope and adapt to some challenges.
Really good answer. Remi, absolute joy to see you again. Many congratulations on your award once again, and we look forward to talking to you next time.
Thank you very much. I'm delighted, and hope to see you very soon.